Thank you very much. It's shaping up as a very good week for St George this week. We put out some assay results for our latest drilling at our Stricklands prospect. They were very good results, and our share price is up 50% for the week. So I'm very pleased to be here to tell you more about St George. Our successful exploration has been at the Mount Alexander project in Western Australia. We have 3 projects there, but the one that's getting us all the attention is Mount Alexander. The map there, all those mines on the right-hand side are the Agnew-Wiluna belt. There's a number of world-class nickel and gold mines already there, and our project is there in the southwest, the Mount Alexander project. So the significance there is that we're close to infrastructure, we're close to roads, power, gas pipelines, and also close to existing processing plants, which are already putting their hand up to toll treat our ore. We don't have to come up with $300 million to develop this project. It's probably be closer to $30 million. So we've got a very good capex-light development proposal. The reason our mineralisation is so special, there's a number of reasons. Shallow depths. We're seeing fresh, high-grade sulfides from 30 metres below surface. That's quite ridiculous. Most of the nickel sulfide mines in Western Australia are now at 500 metres plus depth, and we've got mineralisation 30 metres below surface. We've drilled it down to about 150 metres. We still have to test even further depth extensions. We have a large mineral system. So far we've got mineralisation over a 4.5 kilometre strike. We've got a larger tenement package of 200 square kilometres still to explore. We've got high grades and we've got a number of commodities, nickel, copper, cobalt and PGEs, and the grades we're seeing are all good enough for a standalone deposit of those commodities. We've done some met testing and so far it's very, very good. A clean concentrate is produced from a simple flotation process, very high grades. These are the kind of grades we're getting in our intersections, nice thick intersections. MAD 71 was the one that got everyone excited last November, December, 17 metre plus intersection of high grade nickel copper sulfides. Our share price tripled in the space of 2 weeks after hitting that kind of intersection because that immediately speaks to the economic potential of the project. It's the volume of sulfides that really is an economic grade. The other intersections are also very good economic intersections, again high grades, copper up to 4%, cobalt 0.2%. The PGs are 30% palladium, 70% platinum, and we're going to get very good credit for those. The scale of what we're talking about, we're still drilling out the area, but we've got a 4.5 kilometre strike on the Cathedrals belt. For the New Yorkers, Manhattan is about 3.7 kilometres wide, so that just gives you a feel for what kind of area that we're dealing with. Nova was the last big nickel discovery in Australia. That's got about a 1 kilometre strike of mineralisation. The long sections there, our Cathedrals belt is the bigger map, and inset is the Nova. To scale. These are exactly to relative scale. So it just shows you that we've got quite a bit of ground to drill out and explore and potentially quite a large scale. Also for the North Americans, our mineralisation is similar in style to the Raglan deposits up in Canada. A lot of geological similarities, but one feature that is quite similar is the massive sulfide lenses. There are a series of massive sulfide lenses with some continuity. And also elevated copper and PGEs. The met testing has been very, very good, 99% recovery in the bulk concentrate, but we can actually produce a separate nickel and a separate copper concentrate, very high grades, 18% nickel, 32% copper. In the nickel concentrate, we also recover the cobalt up to 0.55%, and also PGEs are 13.5 grams per tonne. So there's no nasties in there, no high MgO, no arsenic, no talc, which often prevent economic commercialisation of some deposits. This is going to be very easy to process, clean, high-grade concentrate, which will be in demand by smelters. So we're still drilling this project out, but so far the economics is really panning out satisfactorily. Shallow mineralisation means it's going to be low-cost drilling and low-cost mining. We're close to existing infrastructure, so we've got a capex-light development plan coming our way, and the mineralisation is going to produce a very clean concentrate with high profit margins. It's a good time to be looking at nickel. Nickel's had a good run last couple of weeks, and the reasons are pretty clear. The stockpiles are coming down, the nickel price is going up. Very simple supply and demand. Wood Mackenzie, the expert commodity forecasters, are predicting a long-term nickel price of $25,000 a tonne. We're currently at about $15,000 a tonne. So there's a long way to go still. The reason for this uptake in the nickel price is the electric vehicle demand revolution. It's very real. Go straight to that red box in the corner. BHP 3 weeks ago at the Shanghai Battery Metals Conference announced that they will be selling 90% of their nickel sulfide production to battery manufacturers by 2019. So largest mining company in the world, one of the largest nickel producers, will be selling 90% of their nickel sulfide to battery manufacturers. If you said that to someone 5 years ago, they would have called you crazy, but there it is, it's real. The electric vehicle revolution is coming. There's going to be about a 1 million tonne deficit based on the current projections. It's very difficult to project the really uptake of electric vehicles, so we don't really know what that's going to be. But McKinsey & Co, the management consultants, are predicting a divergence of price between the two nickels. The nickel sulfide, which is your class 1 high-grade stuff, easily manufactured into nickel sulfate, which is used for batteries, and your nickel pig iron, ferronickel, which is very expensive or impossible to manufacture into the nickel sulfate and can't be used for batteries. We've got the good stuff, the nickel sulfide. Most people in WA have got the good stuff, and will be in demand. That's just a table of some of the key commodities showing you that nickel has still got a lot of upside. It's comparing the current price to Wood Mackenzie's forecast long-term price. Most of the commodities are already at their long-term forecast price. Wood Mackenzie seem to predict a bit of a fall for cobalt. We'll see if that's true. But we like their prediction for nickel, nearly 50% uplift in nickel over the next 3 years. Where could nickel go? Well, certainly we think the long-term forecast of $22,000 a tonne is achievable, and everything from now up till there is going to be pure profit for someone like us. The previous high in the past cycle was $54,000 a tonne. I'm not going to predict it's going to go there, but I wouldn't bet against it. This is a small corporate snapshot for us. We've got a relatively tight capital structure, 278 million shares, some listed options as well. Our market cap there is listed as 34, but with a nice little rally in our share price this week, we're up to a $50 million market cap. We have about $3 million in the bank, which is a reasonably healthy number for us. Our drill programs are relatively inexpensive. We can drill 40 holes for about $1 million, so it gets us a long way. The largest shareholders are still the founders, myself and my business partners. We put our own money into the company, about $2 million each. We're very determined to deliver a high multiplier return to shareholder investors. City Natural Resources, High Yield Trust, the CQS group out of London, they're in as a major shareholder as well. We are attracting institutional shareholders now who are interested in the nickel space and trying to get nickel exposure to someone like us who can really get a turbocharge in their valuation as the nickel price rises. So that's basically our value proposition for you. We've made a high-grade nickel copper sulfide discovery in Western Australia, a favourable jurisdiction. We're drilling it out, and the economics are looking very, very favourable. We're drilling it up. At the same time, the nickel price is going up. That's going to create a huge value creation for St. George, a major re-rating. We're already seeing a little bit of that this week, but it's only a fraction of where we're going to go as we keep going. Thank you very much.